Netflix shares, they are lower despite beats on the top and the bottom lines. The streaming giant warning on lower operating margins in the second half of this year. Let's bring in our Julia Borston with much more in the quarter. Julia.
Hey, that's right, Frank. Netflix did top earnings expectations and it raised its full year revenue outlook, which was expected, and that was bolstered as expected by foreign exchange. But today the stock is down nearly 5%. One factor perhaps weighing on the stock is the company's operating margin forecast. Though ahead of expectations, the company did say they see a decline in operating margins in the second half due to higher content amortization and sales and marketing costs associated with their larger second half slate of content. Now, even with today's declines, the stock is still up over 87% over the past year. But with no major surprises in yesterday's report, more analysts are on the sidelines. Now, a third of analysts have a hold rating on the stock, while 65% have a buy. JP Morgan with a neutral, saying we continue to think shares need a breather, remain neutral with a $1,300 price target. Goldman Sachs saying we maintain our neutral rating as we still see a balanced risk reward on the shares, as recent stock price outperformance already reflects much of this potential upside. Now, there is one bullish area for analysts and for the company: the potential for generative AI for the likes of lowering visual effects costs and improving advertising. Back over to you.
Our Julia Borston. Julia, thank you very much. Kevin, I want to come over to you. You actually made a covered call ahead of the Netflix results. Walk us through that trade.
If you thought the Apple trade was cool, how about this one, Frank? So we wrote a covered call yesterday on half of our Netflix position in advance of the earnings report, thinking that there might be a little bit of a drag, that maybe they weren't going to just crush it to the top. But the neat thing about NVIDIA, the neat thing about Netflix, most of these Mag 7 names, Steve, you touched on it earlier, the implied volatility going into earnings is something that as a covered call seller, you almost can't resist. So we wrote a covered call for a 12:45 strike, Frank, 1 week expiration, and we brought in $57. Now, we closed that out this morning at the open for $12. So we netted a $45 profit just in a few short hours of trading. Now, I know the stock's down 59, but we hedged $45 of that, writing a covered call into earnings. So I feel like that's something that you can do as a viewer at home when you see a stock going into earnings and option premiums are just that juicy. Also, longer term, we love the name. There's absolutely no reason to have a sell on it. This is a stock you can own forever. We love it, and we'll continue to look at this thing as a great long-term hold.
Jenny, you own Disney. Just want to get your take on what we see with Netflix. Is that a read on anything when it comes
I don't think so.
No, not at all?
No, and I think it's funny because they always pair me up on Disney and Netflix, and they're just completely different businesses, completely different valuations, completely different growth profiles. So, with Disney, it's 19 times. It's too cheap for a high-quality consumer business. The movie business is doing really well. Theme parks have been shockingly resilient. Like, it's up 9% this year. It's just, I don't even know what a good analogy for the not great comparison is. It's just not really a great comparison.
Well, content is king. I just watched Andor. It's a great show.
Okay, fine. Content's king, but that the balance sheets and earnings growth drivers of these two businesses are just too different to say, why do you own this instead of that?
So what you're saying is, Frank, why the hell did you ask me that question?
No, yeah, I'm not saying Frank. I should say it to the producers because it's every time. Every time.
We went to Nice
Netflix comes up, they're like, hey, Jenny, why Disney?
Jenny taking the Weiss role today. Who saw that coming?